Let's take a look at Ralph Lauren, as it's time to hit our social media segment for hashtags. We're going to bring in Landon Swan, the co-founder of LikeFolio.com, and Fast Market contributor Jenny Horn is back with us. Landon, thanks for joining us this morning.
Hey, how you doing? I'd like to hear Jenny's opinion. I think it's Lauren, but I want to know, Jenny probably has the right answer. How is it pronounced, Jenny?
I think it's Lauren, too. We have controversial opinions over here, though.
Yeah, I think it's Lauren, but we're getting from the control booth that it's Loren. I'm like, okay, I'm never calling it Loren.
So we're not as hip as we all thought,
I've been wearing
apparently.
the pony since Reagan was governor. Remember that. I've been wearing the pony. It's Lauren.
The pony.
I said Loren going into the break, and that started this whole thing in between segments here. And it felt weird saying Loren. I got to be honest. I've always said Ralph Lauren growing up, Landon.
I agree with you. When we look at our purchase intent data on RL, it's pretty interesting that people are talking about going into these stores and buying these clothes at basically all-time lows. The purchase intent has been downtrending for years, as has the company's revenue. The stock was sliding for a long time until around the middle of 2017. It started bouncing. Of course, it's selling off with the markets today. I think it's down 4%. But what we're looking at is, keep in mind, LikeFolio is tracking U.S. or English-speaking customers only, and that's about half of Ralph Lauren's customer base. And so we're seeing basically all-time lows on the U.S. or English-speaking customers, but it's tough because the stock has rallied so much, and for us that's quite a divergence play. But you've also got double-digit growth in Europe and Asia, and so that's something that we can't track. But we do know that our purchase intent's falling dramatically over the last few years. The slide has sort of stopped a little bit, and so maybe the bleeding has stopped, and they're kind of going sideways. But it's not looking good as far as U.S. customers are going. But again, Europe and Asia is up, and so there's a little bit of the fact that we don't have all the information with LikeFolio data, but the data that we do have looks poor for the U.S. customers.
Landon, 46.4% is North America. So that's exactly right what you're talking about. But a couple things. What I'm reading is their recovery is ahead of schedule. They had 2 upgrades a week ago from some things. So their comp sales are doing better. And remember, we're coming off last quarter. They beat earnings handily and had a nice gap in the stock. So is it Europe and Asia that could be skewing your data and not showing the real strength that's in this name?
I think that's possible, but one of the things we look at is how does our revenue, or how does our purchase intent data correlate to revenue? And it's our data has been downtrending for years, and revenue for the company's been downtrending for years. They did have a good quarter last time, and it's hard to see on the chart, but that little blip in the end of 2018 it's not high, but it's wide, and so their season, as far as we're concerned, did have decent volume. But we certainly didn't have them beating like they did last quarter. And so the fact that they're growing 10 or 12% in Europe and Asia and only 3% in North America, and almost all of that is online and not in the brick and mortar stores, I think that tells us that our data is right as far as what it can measure, but again, we can't measure everything.
Landon, the only thing I want to add to this too is, looking at this chart, we really kind of threw a wrench into it given these last couple sessions really selling off. It makes that divergence a little bit less, big, I guess would be the right word. Like the magnitude of that divergence has definitely came in going into this announcement. But, as you said, you've seen year over year, the intent has gone down, as well as you've seen that over the last couple of years with revenue as well. And U.S. being about 50%, that's a big chunk still. But I want to bring Jenny in this conversation as well. This is probably a little bit more in your wheelhouse, being in the fashion stuff than maybe mine. Except Kevin's a big
whoa
Polo Ralph Lauren guy.
I think it's because I'm an avid shopper, but they did take a dive going into 2018, and then we saw the CEO make a bunch of big changes. So they added more staff. They began offering, which is kind of a bad word in luxury, but discounts, which is huge because this is a brand that typically does not go on sale. And then the CEO kind of rolled out this plan to start taking inventory away from underperforming department stores. So this is huge because department stores often take a hit with the decline in mall traffic, and basically the CEO said no more department stores. We're going to limit how much we carry our brands in department stores, which is super interesting to me because it makes perfect sense when you look at a Nordstrom or a Macy's chart. I mean, it's kind of a cool story.
But for me, I think a difference, and Landon, do you guys show any data on different brands within Ralph Lauren? Because they have a new brand, kind of the RLX. That's
See,
pretty
Kevin,
popular.
you're pretty hip.
pretty widely popular. So I think, you know, they're still evolving in terms of their brands.
They're in the golf space too. I
Yep.
believe Justin Thomas is a Polo
Yes, they are.
Ralph Lauren golfer.
There you go.
And he's one of the best in the world.
Yes.
He's a major champion. He's one of the young guns. Question for you, Landon. Maybe you'll have some insight on this. Is this more of a overall shift in terms of what people are looking for in terms of fashion styles, or is this different competitors like a Vineyard Vines growing, or other kind of competitors that were smaller 4 or 5 years ago that have really picked up speed in the last couple years?
Yeah, I think that's a good point. I think that's probably what's going on is we don't see an overall industry-wide downtrend. I think that our data specifically for Ralph Lauren is downtrending because of what it's doing. Now, the stock, I think, is up because of a lot of the points that Jenny makes. I think the market is very optimistic about some of these changes and some of the impacts moving forward that those can have. But we're not seeing it yet in the revenue. Now, last quarter they did great, but year over year they're not there. I know that for tomorrow morning, I think they're expected to be off just a little bit, like 4% year over year. We've got them at negative 12% year over year. But again, we're only measuring U.S. customers. The interesting thing that we do see, though, is that happiness overall, as customers are talking about whether or not they're pleased with the product, has actually been going up for about 5 years. And so if you look at this chart, it's a fantastic chart here. You see that 5 or 6 years ago, the customers were about 72% happy, and now they're about 82% happy. And what that tells us is, combined with the fact that less people are talking about going into these stores and buying the products, is this is sort of a reduction in their customer base getting down to the loyal customers. And so they're having trouble, according to our data, in attracting new customers, but the ones that aren't happy are leaving and the ones that are happy are staying. And so that's really critical that their happiness is going up. We love to see that. That means that there's a chance as far as a longer term recovery goes for purchase intent data.
Yeah, and just kind of drawing the line there in terms of it kind of puts almost, not necessarily you don't know where it is, but maybe a floor into where this goes. And that kind of corresponds to what you're seeing on Twitter, Jenny.
Yeah, social slowdown was definitely not something I saw on social media this morning. So our first tweet is from Serge, who says, Ralph Lauren, or Lauren, looking gravy here with price target above 140 and healthy support. Old resistance becoming new support with a few outperforms. The plan is to get before earnings tomorrow and run her up to build a nice cushion, secure some profits, and play the rest on house money. So do you think this person has any real grounds going into earnings pre-market tomorrow morning?
Serge has a game plan. I like any guy, right or wrong. I like someone that has a game plan.
Me too.
So yeah, I mean, he's probably reading the upgrades that we got on the 9th of May, and they raised the price target to 145 from 135. So he's probably reading exactly that.
And hopefully he waited till today to get in before earnings, as it's down about 4.5% right now, down over $5. That really would impact kind of that price point too, Kevin. But if we're adding in, combined with your second tweet, Jenny, it's kind of almost the exact opposite, isn't it?
Exactly. I try to be balanced here. So our next tweet is from Dunny, who says, Ralph Lauren Tuesday before the open, leaning bearish with a potential bounce at 119. So I like to take two different stances here. I mean, you see a company like Tiffany's that's so closely aligned with Ralph Lauren in this luxury space. Their earnings were kind of mixed, but they did have a nice pop after. Could this possibly happen with Ralph Lauren?
Well, the interesting thing is they cite $119. That's roughly right where we're trading right now, Landon.
Yes.
And we seem to maybe stabilized a little bit right around that level, so they may be onto something there. But just to kind of sum it all up from your guys' side, LikeFolio, Landon, in the near term, at least for maybe this announcement, based off what you're seeing from U.S. data, which is about 50% of their revenue, it does look like revenues will be down. They're expecting 4% down, but you're seeing more like 12%. But overall, you do see a trend up in happiness that maybe shows that a recovery maybe is around the corner somewhere down the road. Yeah,
you summed it up perfectly. The only thing I would add is that when it gets down to really detailed numbers, we're not meant to be that precise. So I say we're down 12% year over year. That does not mean that we expect revenue to come in that light. We just mean that we are more bearish on the data than the market is. And as far as trading it, it's really tough because you've got a 7.5% move priced in, and it's down 4% today. These markets are really crazy, and it's going to be really tough to trade this. So, just keep in mind, if you're looking at LikeFolio data, again, really important, we only have about half of their data coming in because we only track U.S. customers, but that data is slightly bearish.
Well said, Landon. We got to leave it there. Thanks for joining us. Me and Kevin are going to do our best to dissect this one a little bit